What's up, apes? Welcome back to another Daily Peel video stream of the day. My name is David. Let's go ahead and get right into breaking down markets for you guys so that we can all get ready for the ticker tape on Tuesday. It is currently 7:43 p.m. here on this Monday, May 20th, 2024. Beautiful day here at the Daily Peel Global Headquarters, and I certainly hope it is wherever the hell you are as well. Now, it was a beautiful day for our portfolio, that's for sure. We were up about 15 basis points for the session, meaning that we did outperform the S&P 500. Those miserable, pathetic index fund managers don't know what hit them today. The S&P was only up about 0.09%, whereas the NASDAQ was up like 20-something basis points. Fuck the NASDAQ. I mean, who even cares? We'll be dominating both of these indexes in short order. I heard Warren Buffett is shaking in his shoes. He knows that the apes at 𝗪𝗪𝗀 are really coming for him and his title, especially now that Jim Simons is gone. That puts us in the number 2 position for best investors in the world. I'm pretty sure. I haven't checked the leaderboard in quite a while, but that's just what I can imagine it's got to be. So the Alpha portfolio is up 9.9% on the year, currently trading just below $1.74 million. Make sure to sign up for 𝗪𝗪𝗀 if you want to stick along with us, if you want to trade along. Get those gains, get those losses, accept the losses with grace as we always do. Come and join us, come and join our fund flows as well. You'll get updates to all of the trade trackers, you'll get access to our portfolio, get access to all of our research, you'll get into a premium channel on our Discord. Really, I think you'd be stupid not to join this thing. This is kind of like, basically the idea was for me to make kind of like what I would have wanted to subscribe to when I was in college. So, hey, if that's you, go sign up right now, or I don't know, I'm not going to fucking do anything. Do whatever you want to do. Let's go ahead and get into some banana bits. First and foremost, Goldman Sachs is beginning to extend lines of credit to private equity firms as deal making starts to make its return. So we are seeing a continued uptick in deal making, and this time instead of just on deal count or like a dollar flow, it's an actual firm that's extending further credit for deal making. Now, that's probably the biggest side of all of them, because not only are they saying like, hey, I want to make this deal because it's like a one-off chance, that's Goldman saying, okay, the private equity market is coming back to life. We can make some money off this. Deal flow is back. Action is back. Let's go ahead and increase our chips on the table. So that's exactly what they did by extending these credit lines to private equity firms. We'll see how they go and fuck it up from here, but I'm sure it's going to be a great story. Now, meanwhile, don't expect government spending to slow down anytime soon. Now, I don't know about you guys, but it fucking keeps me up at night how Biden is running up our checkbook like this. I mean, in an election year, it's definitely something that's expected, and that's exactly what this data from Daily Chartbook points to. Pretty much never once in the history of humanity has an elected government, I should say elected, because for most of human history it was, in fact, the exact opposite of elected, but never is an elected official going to decrease spending in an election year. You'd have to be an actual good person to do that, and that's an oxymoron with people in politics. So don't expect the president to ever do so. Definitely not happening this year. But good news for Qualcomm, on the other hand. They were selected by Microsoft to be the primary provider of the artificial intelligence chips powering Microsoft's new AI PCs. Just read a WSJ story as well. That was somebody yapping about how they were like creaming themselves to the new fucking laptops, and it's like, how cool can this thing be? I don't know. It didn't get me too fired up. I'll probably try this thing out if I have money, is actually going to be the big question, but we'll see. You know, if you guys want it bad enough, if you want my product reviews bad enough, let Patrick know, and then we can start to play around with some cool shit. That's actually a really good idea. I would love to do something like that. But let's see what happens first. You know, let's see how the product develops. Either way, Qualcomm, a big winner of the day with that news. Finally, Mr. Jamie Dimon, probably the most respected person in all of finance. I mean, and that's including Jerome Powell, that's including Janet Yellen, that's including Sam Bankman-Fried. Nobody is respected more so than Jamie Dimon, the 68-year-old tycoon who has been running JPMorgan for seemingly ever. I mean, it seems like he was the founder of the company, if only it wasn't named after the actual founder. I'm surprised he didn't change his last name to Morgan so that he could at least come a little bit closer in line with that. But he has kind of hinted at the fact this week that his retirement is approaching a little bit sooner than expected. So historically, anytime somebody asks Jamie Dimon, like, hey, when are you going to fucking kick the bucket, buddy? He always says, oh, 5 more years. And he's basically been saying that since Vietnam. And so today, or yesterday, I believe it was, he said in an interview that it's going to be less than 5 years. He is 68 years old. I wish our Congress or our elected representatives could take note of this. We didn't have 2 literal octogenarians running for the presidency, while I'm pretty sure there's like 90-year-olds in charge of House committees. My 90-year-old grandmother, we get scared when she's fucking walking up the stairs and these people are running the entire damn country. Whatever. I mean, you know, there's no way these people are healthier than my grandmother either, and she can barely remember my first name at this point. So we'll see how that goes going forward. Shout out to Grammy and her 90th birthday. Anyway, let's go ahead and move into the macro monkey story of the day. We are talking about social insecurity. So this is something I've been waiting to talk about for a little while. On May 6th, the board of trustees of the Social Security Administration published its 2024 annual report to Congress. This is basically when they come in and say, hey, mom and dad, this is how completely fucked I am on my future finances, because that's the story of the Social Security Administration. Don't believe me? Well, check this out. We have some innovations going on at the Daily Peel as well. Damn it, that didn't work when I thought it would. Bang, that's a chart right there that you can barely see at all. I really don't know what to do about this glare, if I can angle it differently, but if a photographer out there could let me know what to do, please do, because now I'm realizing this is basically useless. But anyway, let's go ahead and run with it. This chart is basically showcasing the odds or when the Social Security Administration is going to go bankrupt. Now, you can't see these dates down here, but it's pretty much between 2034 and 2044 is the range of about 97.5% confidence. So basically says that there's a 97.5% chance that Social Security runs dry by 2044. The median expectation is it's going to be more like 2035, and we are talking about exactly why that is going on here. Somehow, this report that the SSA administration or the SSA published to Congress actually makes Congress look like the financially responsible group of people. Completely ridiculous. I know it's an idea I never thought I would ever have to imagine, but to take a step back before we go ahead and dive into exactly why this data is getting destroyed so quickly, so violently, and most of all so assuredly, Social Security is effectively a federal government-sponsored retirement plan for any and all Americans. Any American, after they turn the age of 67, is eligible to receive Social Security checks. We'll talk about the formula that determines exactly how much it's going to be in a little bit. But not only does this cover retirement spending, but it also covers disability insurance. So we're talking about both old age and survivors insurance funds, as well as the disability insurance fund. Now, counting on the U.S. government at this point to fund your retirement is like going on a date with Ted Bundy in 1989 and counting on him not to murder you. It's just all around not a smart decision whatsoever, but probably an equally responsible decision. So at the end of 2023, Social Security in total provided benefits to about 67 million American workers, disabled workers, retired workers, and their families. The total income for the year was $1.35 billion, while the total expenditures were north of that at about $1.39 billion. Now, this led to a total decline in reserves for these accounts from about $2.83 billion to $2.78 billion. So we're still above water right now. I was going to say well above water, but I don't want to lie to you guys. So we still have these reserves that are kind of backing us up for a little bit, but, you know, based on these trend lines and kind of going bankrupt by literally 2035 in the most likely scenario, doesn't get us too excited. So let's break down exactly what's going to be going on here. So this chart is, you can't read this at all. This is fucking useless. This chart is showing the cost as well as the incomes, and the incomes are kind of projected in different scenarios for the different funds that power Social Security. So this top one that we see here is the old age and survivors funds. So these three lines that you can actually see, those are the different scenarios. So basically they're just, you know, it's like a sensitivity analysis. This is the absolute best case scenario. That's the income that they'll be receiving. This down here is what's actually going to happen. So basically what we're seeing is the Social Security Administration is completely screwed. None of this is going well whatsoever, and we can see the costs are, well, I can see, you can't see it because of the shape of the line. Costs are ballooning. They're going to be remaining well above income for the OASI out through the entirety of the projection period, out to about 2098. So I certainly hope I'm not still alive at that point, because Jesus Christ, I can't imagine the sounds I'm going to make when I stand up, based on the sounds that I already make right now, and I'm only 24 years old. Meanwhile, down below here, we have the Disability Insurance Fund. This one is actually solvent in the best case scenario. So this one actually has a chance at remaining solvent throughout the projection period, but it's such a small amount, it doesn't even come close to covering the OASI at the same time. So, you know, I don't know about you guys, 2035, I'll be roughly 35, 36 years old. None of this has absolutely no chance of covering anything to do with my eventual, like, Alzheimer's medication and all the cruise ships that I'm going to go on with all of my half-brain elderly compatriots. So that's going to be very interesting to see exactly kind of how they handle it. But just to understand how bad the situation really is, effectively what this organization does when costs are exceeding income, like they have been every single year since about 2011, what they do is they dip into these reserve funds. So what we're seeing right here, these lines are, it's like this is the combined OASI and the DI reserve funds right here. This is their totals into the projection period under different assumptive circumstances. So absolute best case scenario, these things might remain solvent by like 2080-ish. That is absolutely not going to happen because that assumes basically no inflation, great wage growth, great productivity growth. It's a fairy tale. It's like Milton Friedman's wet dream, but it's definitely not going to happen. Whereas these other scenarios show both funds running dry by either 2032 or 2036. So, these things are gone. Absolutely do not count on this whatsoever. We all kind of know that Social Security is already dead, but damn, I did not realize that the situation was this dire. This is a big reason for why this is so dire. Now, this chart right here, what it's showing on the x-axis is the calendar year, and the y-axis is the number of covered workers per recipient of the OASI. Keep in mind the OASI is the Old Age and Survivors Insurance Fund. So this is old-ass fucking people who have lived way too long, and the number of workers that it takes to actually cover their existence, basically for the federal government to tax them enough to be able to fund the lifestyle of grandma and grandpa. It used to hang out up here at around, 3-ish or so. That was the total number of workers per OASI-DI recipient. That's kind of the combined term right there. So it used to take essentially, we used to have enough. We used to be able to get enough from 3 workers to be able to kind of fund this program going forward. That is absolutely not the case going forward. So the number of covered workers per OASDI beneficiary is set to decline. Now, this doesn't really have anything to do with the tax rate or anything else. This is pure demographics right here. It's an aging population. We're going to have way more old people than we are kind of young people in the workforce actually contributing to society, and that is going to be quite the detriment on Social Security going forward. That's kind of the biggest complaint right now, or the biggest driver, but the thing is, everybody acts like this is DOA and there's nothing we can do about it. There absolutely are things that we can do about it. We have Exhibit A right here. This is the graphical version of the formula of how Social Security benefits are actually determined. It's ridiculous. I mean, it's done in a somewhat progressive manner, but just to give you guys the long story short, if a retiree earned an average of about $1,100 per month for their entire career, they receive about $990 per month in benefits. If somebody received an average of $10,000 a month throughout their entire career, they receive benefits of about $3,289.27 per month. How does that make any fucking sense? The people who are earning more money are getting more in retirement from the government, even though they've been earning more money. They do not need this. I mean, they need it far less than the person who earned $1,100 a month. Like, it should be completely backwards that way. I think once you're over a certain level of wealth or income in your career, you shouldn't be receiving Social Security anymore. You don't need it. All you're doing is putting a burden or putting an additional debt on young people and crippling American growth into the future, just like boomers are doing with the housing market. Anyway, my solution to this is the exact same as Bill Ackman's solution. So I don't think he came up with this, but he was the first one I saw that actually promoted it. So I'm going to give him all the credit. And he basically has this idea where you put $7,000 into a retirement account / trust fund for every single baby that's born in the United States annually. That comes at a cost of about $20 billion, which is far less than what, the cost that these things are racking up over time. So what this effectively does is you throw $7,000 cash in little Jimmy's account on the day that he's born. You invest that in the S&P 500. You turn on dividend reinvestments like any responsible investor should in the S&P 500, and that thing's going to balloon. If it continues at its historical trend, by the time they're 18, it's like, I actually probably should have run the numbers before I started yapping about this, but can you imagine, like, 65, 70 years, like, at age 67, how much money that would be? Nobody would need to rely on Social Security anymore, and it costs way less annually than these programs do to run. Plus, it's a way simple formula than whatever the fuck is going on this chart. We have solutions to these things. We don't necessarily need to completely eliminate Social Security all at once. We can do this in steps. We have over a decade to figure this shit out. Don't act like it's completely and entirely all lost just yet. Call your congressional representative, tell him he's an asshole and it's time to retire because he's probably over the age of 85 years old and that he needs to start thinking about funding babies for their retirement account. I mean, this is a great solution. I'm sure it's not the only solution. If you have any others, let me know down in the comments below. Okay, let's go ahead and move on into some of the big stock moves of the day. I bet you didn't expect that WSO logo to come up there, did you? It's almost like we're professionals over here or something. So, what's right? We have Hims and Hers Health. I thought this was like an erectile dysfunction company because that's what all the commercials I see of it are for. I wonder why that is. Don't say anything about that in the comments or I'll cry myself to sleep about it. Anyway, this just was further confirmation that the pharmaceutical industrial complex is on fire. It is still going strong if anybody was worried. Hims and hers, they're adding GLP-1 drugs. This is the Ozempics, Wegovys, Zepbounds, whatever the other one is, all getting added to this startup pharmacy. So obviously investors were pretty fired up about that, driving more traffic not only for these drugs, but just to get more people on the site and hopefully, just switch their drug dealer to Hims and hers instead of CVS, Walgreens, or that guy down the street. Anyway, moving on down to our next big move, we have Norwegian Cruise Lines, up 7.6% on the day. This was largely due to an actual reason. So the company came out and they said that they were going to be performing much better in fiscal 2024 than they had previously guided for. Shares are still down about 73% from highs reached on January 3rd in 2020. They haven't been even close to that since. They're still trading in the teens, about $16 as of yesterday. So what they did was they increased their estimates for EPS in fiscal 2024 from $1.32 to $1.42, giving hope to longtime shareholders. They also expect further growth and margin improvements down the line, and they expect to hit close to 40% gross margins by 2026. We're not talking about Social Security anymore. They expect to hit much better margins by fiscal year 2026. So that got investors pretty fired up to start off this week. Well, let's see if they can continue it going forward. Moving on down below into the rot names of the day. First and foremost, we have Li Auto. These guys thought it would be smart to come out here and be honest on their earnings report. Absolutely crazy. Led to their 12.8% plummet in share price. Operating costs for the quarter spiked 71% annually. So even though revenue was up 36%, EPS was actually down 36% as well. The stock is down 46% from highs reached in early February. Are you buying this dip? I mean, it was a pretty solid earnings report because operational costs spiked so much because they were hiring more people. That was the biggest driver of the spike in operational costs. Another big reason for it was commodity prices, especially those related to batteries. But still, when you're hiring more people to sell your shit, it's probably going pretty well. So Li Auto down 12.8% might be a buy the dip opportunity. Speaking of buy the dip, let's go ahead and talk about Target. They are down 2.1% for being absolute heroes. I mean, it's not all the time that heroes are recognized immediately when they're doing their work. And Target was absolutely doing the Lord's work on Monday. They came out and they said they're going to be cutting prices on over 5,000 items across North American stores, slashing prices to hopefully increase volume because apparently nobody's shopping at Target anymore. Inflation has had a big thing to do with that. So Target says, you know what, fuck inflation, fuck the CPI, fuck the PCE. Let's go ahead and cut prices and allow people to actually buy the shit that they want at a reasonable price. I know that sounds crazy in the American economy, but hey, Target's being a trendsetter here. They got earnings coming out on Wednesday, so we'll see how well that starts to go for them. Those price cuts aren't going to impact those earnings at all, but we'll see how bad the volumes truly are. If they're cutting prices now, probably not a good omen for that earnings report, and that's probably why shares fell 2.1%, in addition to the implicit admission that demand must be lowering, and that's why they're lowering prices. Moving on down into our last story of the day, we have Javier Milei. Is he making miracles or misery? I am, of course, speaking about the president of Argentina, Mr. Javier Milei, got into office on December 10th of 2023. You know, it's not very frequent that we see a country's leaders stand up there and say, you're all stupid, you're all insane, I am here to save the entire planet. That is exactly what Javier Milei did at the World Economic Forum this year. I'm pretty sure he was in between that communist and that other communist. And so it was pretty interesting to see Milei come out there and completely change the vibe with his message. He basically came in and said, you know what, we are going to fuck shit up. We're going full libertarian Milton Friedman style economics. So let's go ahead and see how it's going so far. Well, this first chart that we have to show, this is GDP growth in Argentina on a quarterly basis since 2021. So as we can see, it's going positively. It's been fucked over the past couple of years. This is the most recent quarter. So we see about a 1.9% decline in the first quarter of 2024 for Argentina's GDP growth. Now, obviously that's not ideal, but it has been pretty volatile because Milei and his predecessor both had some pretty radical policies and views that kind of pulled in opposite directions of each other. So what's going on right now, Milei is trying to kind of spin this as a period of change, a period of transition, and there's going to be some suffering in the interim period, but it's all worth it for this right here. What we're seeing right here is the Argentinian monthly inflation rate, and I know you can't see that line whatsoever, and I do apologize for it. I'm going to feel terrible about this once I hop off the video. What we see is a big spike up to about 25% on a monthly basis. We are now down below 10% for the first time since October of last year. So getting inflation under control, he's been doing a pretty good job of it so far. Inflation also is a pretty volatile measure, so it's not exactly like a huge vote of confidence, but they have reined in inflation from the over 200% annualized rates, or at least they're well on their way to doing so. In fact, things have been going so well that the country was actually able to drive a fiscal surplus so far this year. So this shows the balance between basically expenses and incomes of the Argentinian government. As we can see right here, they lost money pretty much every month forever and always up until February of this year. So February, March, April, May. As we can see, these are all government surpluses. Obviously, it is in decline as well. So it's going to be interesting to see how this progresses going forward. But basically, it's kind of like when a person follows Dave Ramsey's advice and starts to actually take care of their debts and starts to be financially responsible. That's what Argentina is in the process of doing right now. If I were to start to, try to take care of my mountain of credit card debt, I would be ripping ramen. I would be ripping, I definitely wouldn't be doing this dumb shit. I'd probably go get a real job. But what that would allow me to do is actually increase liquidity that I'd be able to get from banks. They might be willing to lend me money, and it's the exact same on a national level for Argentina. IMF, other international organizations are actually starting to fund them and work with them to kind of restructure and reorganize their debt so they don't go completely bankrupt. The only downside is the people of Argentina are not having fun right now. It's that real bros from Simi Valley meme, like, I'm straight up not having a good time, because basically, in addition to devaluing Argentina's currency and destroying regulations across the economy, costs have been absolutely spiking. So not only is inflation still ripping, but because of this lack of regulations, that allowed landlords and allowed utility providers to spike their costs that they're going to be charging. So obviously that led to quite the downside for the average Argentinian person, but they seem to have a good amount of faith in Milei in that this could work out for them long term, because it had gotten so bad prior to him getting into office. So, there's no revolution yet, but it's a real race against the clock at this point. We had to finish up with a quote from Mr. Milei himself. One of my absolute favorites. This guy is an absolute whack job, by the way. He spent $50,000 to get his dog cloned because he simply couldn't bear to see his dog pass or something like that. He dropped 50 grand to get his dog cloned. He has the balls to have hair like he does. Go look up a picture of him because it's absolutely insane. But some other crazy shit that he did. His nickname is literally El Loco, which means the crazy for the monolinguals out there. I'm educated. And another one of my favorite things about this guy is that he constantly espouses affection for Al Capone. This is the gangster who basically ran Chicago during the Prohibitionary period. And Milei is a big fan of his. He ultimately did get put away for tax evasion, and then his brain rotted full of syphilis while he was in prison. So definitely a great person to admire. But one of my favorite Javier Milei quotes of all time is, of course, if printing money would end poverty, printing diplomas would end stupidity. We know that that's not true because I have a diploma sitting right over there, and hey, we all know what that means. Anyway, that about does it for us here today, guys. Thank you for joining once again. It is now 8:05 p.m. and I can't believe I've been yapping this long. Patrick really is going to kill me if any more of these go over 15 minutes. And honestly, I might do the same thing if the next one goes over 15 minutes. So please, somebody come punch me in the face the next time that happens. I should probably shut up before I start making it even worse. But hey, shout out to you guys. Hope you have a wonderful week. Hope your portfolios are up and blah, 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 and all that nonsense. Happy investing, happy trading. Bye now.